Today, just a few more trading sessions left before we close the books on the 2020 stock market. We take a look at one of the year's defining trading strategies and its prospects in 2021. Plus, in a last-minute, unexpected Twitter video, President Trump declared his opposition to the COVID relief package, and he called for stimulus checks to be hiked from $600 to $2,000. And finally, an Amazon warehouse 14 miles outside of Birmingham, Alabama, got one step closer to holding a rare vote to unionize. I'm Mackenzie Sagalos, and this is CNBC After Hours. Another mixed day on Wall Street. The Nasdaq finished in the red, while the Dow and S&P closed higher. The first win for the S&P in the past 4 days. And with today's action in the books, that leaves just 5 trading sessions left in 2020. And tomorrow is only a half day. Now, it's a bit cliche among financial journalists to use the word roller coaster when referring to the stock market, but it has been a roller coaster year. Stocks U-turned from the depths of the brutal sell-off when COVID first arrived in the U.S. to setting new records. And the so-called stay-at-home trade may have been the defining trade of 2020. Companies that provided goods and services tailored to a socially distant society enjoyed soaring stock prices. But with vaccine distribution already on the way, what's in store for these stocks come 2021? CNBC.com markets reporter Pippa Stevens can break it down.
It's been a wild trading year for stocks. In the first quarter, the major averages tumbled into a bear market at the fastest pace on record as the coronavirus pandemic took hold and the economy really shut down in an effort to slow the spread of the virus. And since then, stocks have rebounded at an equally quickly rate, and the S&P 500 is now 68% above its March low. Now, a lot of that has been from strength in the so-called stay-at-home trade, and this really has been one of the top trends of 2020. So these are companies that helped all of us transition to a life and work at home. So think names like Zoom, Amazon, Shopify, Teladoc. All of these names just saw customers flock to their services as we dealt with this unprecedented situation that we found ourselves in. As users flocked to these platforms like Zoom and Peloton, the stocks responded in suit, and each of those names are up more than 400% this year amid record growth, record revenue rates with users flocking to those platforms. So a lot of the time we saw these stay-at-home stocks trade in tandem with the latest news on the coronavirus front, whether it be a spike in cases or positive developments on the vaccine front, as investors really saw their fate tied to the developments of the pandemic and when we would return to a quote-unquote normal lifestyle. So we look at Zoom in the past month, shares are down about 20% as investors fear that a widespread vaccine rollout will hinder the platform's future growth. And right now, there are currently 2 vaccines already in distribution across the US. So investors are now thinking, well, if we go back to the office next year, then people are going to really pull away from their Zoom usage, and that will, of course, hurt the company. But on the flip side, other analysts say that the behaviors that the pandemic changed in 2020 are not going anywhere, they're here to stay. So some names like Zoom and Teladoc and Peloton were perhaps uniquely positioned to benefit from the pandemic when everyone was working and living at home. There are other names like Amazon and Shopify that were already experiencing strength before the pandemic. And the pandemic has really solidified the growth of e-commerce and how e-commerce and the digital revolution is really here to stay. So looking at Amazon, we saw customers flock to the platform as they delivered more of their groceries and more of the essential items, and they really relied on the platform as a way to have goods delivered to them without having to go out. And so once people have seen the convenience of that, analysts say that behavior is likely to carry on to 2021. Once we try something out for the first time and see how easy it is, that behavior is going to be here to stay.
Okay, let's get to our sound check. Here's a roundup of the day's biggest action and what the top newsmakers and business leaders had to say on CNBC's airwaves.
I think of them as the new consumer staples. You wake up in the morning, what do? You grab your iPhone to get on the Google to do what you need to do. So I would not de-emphasize them.
We're at about 2.3 months of supply right now, gang, which is like just way outside of the normal range, which is generally a 6-month supply. It's about 1.28 million homes that are on sale.
When the pandemic is over, we don't expect growth to significantly slow, because this is not just a trend. This is what it's going to be, and this is what it has to be.
So we went from a model, as you said, where we used to ship a game every 12 months or every 24 months, depending on the franchise, to an always-on engagement. And I think that's what has really changed in consumer behavior and consumer habits. Players want to be always on and have the game available wherever they may be.
There's an Amazon warehouse in Bessemer, Alabama, about 14 miles outside Birmingham, that's at the center of a potentially pivotal effort to unionize. A 3-day National Labor Relations Board hearing wrapped up yesterday between the e-commerce giant and the union looking to represent the facility's workers. The result? Well, the warehouse employees moved one step closer to holding the company's first vote to unionize in 6 years. This news comes at the end of an arduous year for the frontline workers in Amazon's warehouses. The company disclosed that nearly 20,000 of its frontline employees contracted COVID-19 between March and September. CNBC.com's Annie Palmer has been covering Amazon throughout the pandemic, and she can explain what's at stake ahead of this expected union vote.
Amazon workers at this Bessemer, Alabama warehouse filed a notice with the National Labor Relations Board last month, essentially saying that they were looking to be represented by a top retail union, the Retail, Wholesale, and Department Store Union. That essentially sets the retail union up to potentially hold a vote at this Bessemer facility in mid to late January. Amazon has a fairly complicated, shall we say, history with when it comes to union organizing, and they've made it very clear in the past that they feel there isn't a need for unions in their warehouses. Over the years, we've seen some various efforts on behalf of warehouse workers to organize their facilities, the last one being in 2014 when there was a substantial union drive in Delaware among some mechanics there. That vote failed. And so, since then, with the pandemic and just, I guess workers organizing online and just having other venues to kind of share their grievances and things like that, there's been this kind of increasing groundswell among warehouse workers to, potentially unionize their facilities. And so Amazon has come back pretty hard against those efforts. Amazon, when they're asked about their stance on unions, they'll say that they don't support them for a number of different reasons. The fear is essentially that, if unions came in and said, hey, these workers are being, their jobs are too arduous, we really need to relax these productivity standards, that could potentially threaten Amazon's, prime promise of getting your packages to you in 1 day or 2 day or increasingly same day. Labor experts are all really closely watching how this vote will go when it likely takes place next month, because labor experts have said that all it takes is one facility to break open that that barrier of organizing for ostensibly many other facilities across the country. I mean, it must be said that these workers do have a very steep challenge ahead of them, because there are so many warehouses and fulfillment centers located in the U.S. There's hundreds of them, and so it would really take place on a facility by facility basis.
Okay, time for today's numbers round. We'll start with 100 million. Pfizer has reached a deal with the federal government to supply 100 million more doses of its COVID-19 vaccine to the U.S. by July 2021. So that brings the total number of doses that Pfizer plans to deliver to the country to 200 million. Now, remember, Pfizer's vaccine requires 2 shots, so 200 million doses is enough to inoculate 100 million people. The federal government will pay close to $2 billion for the additional doses. Last week, the U.S. said it would buy another 100 million doses of Moderna's vaccine, the second to win emergency approval from the FDA. So that means that Pfizer and Moderna together have agreed to supply the United States with 400 million vaccine doses. Next, 1,132. Some 1,132 chain stores in New York City closed this year as the Big Apple took a major economic hit from the pandemic, according to the Center for an Urban Future. Among those who've shuttered locations, Duane Reade Pharmacy, Starbucks, and Papyrus card stores. Now, the borough with the most closures, Manhattan. 546 stores closed across the island due to its dependence on office workers and commuters. And finally, 2,000. Last night, President Trump tweeted a last-minute opposition to the $900 billion COVID relief bill that already passed the House and Senate earlier this week. One of his biggest issues, the size of the stimulus checks. So Trump wants them to be bigger, $2,000 each, instead of the $600 that Congress agreed to. Now, Democrats, well, they're all aboard this idea because they originally wanted larger direct payments. House Speaker Nancy Pelosi said today that she would convene the House tomorrow morning to try and approve $2,000 stimulus checks via unanimous consent. That means that any representative who decides to return to the Capitol on Christmas Eve could block the entire measure. Now, even if it does pass, the Republican-controlled Senate might strike it down. What's important to note is that Trump never explicitly said whether he would veto the stimulus bill. And keep in mind, the relief package got so much support in both the House and the Senate that Congress could likely override a potential veto if they wanted to. But that process could take weeks, and any delay in turning it into law threatens the financial safety of millions of Americans whose jobless benefits expire on Saturday. Now, if Trump signs the bill, those benefits would be extended. Our politics desk is covering every twist and turn of getting this bill turned into law. Catch all their coverage over at CNBC.com and by downloading the CNBC app. That's it for After Hours. We'll be back here in our home office next week for our last 3 shows of the year on Monday, Tuesday, and Wednesday. So enjoy the Christmas holiday and be sure to catch us on Monday.